Let's face it, credit scores can feel like a mystery. What do they really mean, and why do they matter so much? If you've ever felt overwhelmed by the concept of credit scores, you're in the right place. In this video, we'll break it all down. What a credit score is, how it's calculated, why it matters, and most importantly, how you can improve yours. Stick around, and by the end of this video, you'll have the tools to take your credit score to the next level. A credit score is a three-digit number that represents how trustworthy you are when it comes to borrowing money. In simpler terms, it's your financial report card. The most common type of credit score is the FICO score, which ranges from 300 to 850. The higher your score, the more likely lenders are to trust you with loans, credit cards, or even renting an apartment. But why does it matter? Because a good credit score can save you thousands of dollars over your lifetime, whether it's through lower interest rates on loans or better insurance premiums. So, it's worth paying attention to. Now let's demystify how your credit score is calculated. It's based on 5 key factors. 1. Payment history, which makes up 35%. This is the biggest chunk of your score. Paying bills on time is absolutely critical. Missed payments, they'll drag your score down fast. 2. Credit utilization, which accounts for 30%. This is the percentage of your credit limit that you're using. For example, if your credit card limit is $1,000 and you've charged $500, your utilization is 50%. Keep it below 30% to maintain a healthy score. 3. Length of credit history, making up 15%. The longer you've had credit, the better. This factor rewards people who've responsibly used credit over time. 4. Credit mix, which is 10%. Having a variety of credit types, like a mortgage, credit card, and car loan, can boost your score. It shows lenders you can manage different types of debt. And finally, 5. New credit, also 10%. Opening too many accounts in a short time can hurt your score. Each time you apply for credit, it results in a hard inquiry, which can temporarily lower your score. Want to know your score? You're entitled to a free credit report every year from each of the 3 major bureaus: Experian, TransUnion, and Equifax. Visit annualcreditreport.com to access yours. For your actual credit score, many banks and credit card companies provide it for free, or you can use apps like Credit Karma or Experian. Now that you know how it works, here's how to boost your score. 1. Pay on time, every time. Set up auto-pay for all your bills to avoid missing a payment. Late payments can stay on your credit report for up to 7 years. 2. Lower your credit utilization. If you're using more than 30% of your credit limit, pay it down. If possible, ask for a credit limit increase to improve your utilization ratio. 3. Don't close old accounts. Even if you're not using an old credit card, keep it open. It helps with the length of your credit history. 4. Limit new credit applications. Avoid applying for multiple credit cards or loans in a short period. Hard inquiries can ding your score. And 5. Dispute errors on your credit report. Sometimes credit bureaus make mistakes. If you spot inaccuracies on your report, dispute them immediately. Correcting errors can give your score an instant lift. So why should you care about your credit score? A high score means lower interest rates on loans and credit cards, easier approval for renting apartments, better deals on car insurance, and even some job opportunities. Yes, employers sometimes check your credit. Your credit score isn't just a number, it's a tool that can unlock financial opportunities and save you money over time. Before we wrap up, let's debunk a few credit myths. 1. Checking your credit score hurts it. False. Looking at your own score is a soft inquiry and has no impact. 2. You need to carry a balance to build credit. False. Paying off your card in full every month is actually better. 3. Closing a credit card helps your score. False. Closing an account can reduce your available credit and hurt your score. Your credit score is a powerful tool, but it's not something to fear. By understanding how it works and following these simple tips, you can take control of your financial future. Remember, improving your credit score takes time, but every small step makes a big difference. So, what's your next move? Check your score, start building good habits, and watch your credit soar. If this video helped you, be sure to like, subscribe, and hit that notification bell for more tips to master your